Hey everyone, and welcome. Today we are diving deep into a topic that, let's be honest, affects millions of us: renter's insurance. And we're going to zero in on one of the biggest names out there, Allstate, to figure out what you get, what you don't, and how it all really works. So let's get right into it.
All right, let's just kick things off by busting a huge, and I mean huge, myth. You pay your rent on time, you know your landlord's got insurance on the building, so if a pipe bursts or someone breaks in, you're covered, right? That expensive laptop, all your stuff, it's all good? Well, yeah, about that. Let's dig in. And that really gets to the heart of the matter, the fundamental risk every single renter is taking, whether they know it or not. See, there's a massive difference between the insurance that protects the building's bricks and mortar and the insurance that protects you and your life inside those walls. They are two completely different things.
And here it is, the single most important thing to get. Your landlord's policy is there to fix the roof, the walls, the structure itself. It does absolutely nothing for your TV, your couch, your clothes. And, this is the big one, it does nothing for you if someone gets hurt in your apartment and decides to sue. Without your own policy, all of that is totally unprotected. You're on your own. So how do you plug that giant hole in your financial safety net? Well, that's exactly where a renter's policy, like one from Allstate, is supposed to step in. So let's pull back the curtain and see what this thing actually is and what it's promising to do for you. At its core, it's actually a pretty simple deal. You pay a regular fee, that's called the premium, and in exchange for that, Allstate signs a contract saying they'll cover your back financially if certain bad things like a fire or a theft happen. It's basically a formal handshake to protect your wallet from a catastrophe. And pretty much every standard policy stands on these three legs. First, you've got personal property. That's for all your stuff. Easy enough. Second, and maybe most important, is personal liability. This is your shield. If your dog bites a guest or your bathtub overflows and ruins your downstairs neighbor's ceiling, this is what keeps you from getting wiped out financially. And third, additional living expenses. If a fire makes your apartment unlivable, this is what pays for a hotel so you're not sleeping on a friend's couch.
Okay, so we get the basic idea, but how does this all work in the real world, when you actually need it, when the panic sets in? Well, it all comes down to two things: understanding your policy paperwork and knowing how the claims process works.
Now listen, the full insurance policy is a long, dense document full of legalese. Let's be real, nobody reads the whole thing. But there's one part you absolutely have to know: the policy declaration page. Just think of it as your one-page cheat sheet. It summarizes everything important about your specific coverage. And that cheat sheet breaks down into these four key things. Your coverage limit, that's the max amount Allstate will pay out, period. The deductible, that's the part you have to pay out of your own pocket before the insurance money even starts flowing. Your premium is just your monthly or yearly bill. And endorsements, think of those as special upgrades for valuable stuff, like an engagement ring or expensive camera gear. That's your whole contract in a nutshell. Understanding the paperwork is one thing, but let's talk about that moment you hope never comes. A pipe bursts and floods your kitchen, or you get home and realize you've been robbed. What do you actually do in that moment? The process itself is pretty logical. Step 1, report it immediately. Call your agent, use the app, whatever. But step 2 is the one that's all on you, and it's critical. Document everything. Take photos, find receipts, make a list of serial numbers. Proof is your absolute best friend here. After that, an adjuster gets involved to check things out, and if your claim is approved, you'll get a settlement. But here's where you got to manage your expectations. A simple claim, say a stolen laptop where you have the police report and the receipt, that could be settled in a week. But a really complex claim, like a major fire that damaged the whole building, that's going to involve a much deeper investigation, and it can easily take weeks or even months to fully resolve.
All right, now for the part everyone worries about, the fine print. Because let's be clear, no insurance policy covers everything. And it is so important to understand the limits before you ever have to make a call. Let's look at what's not covered and why a claim might actually get rejected.
So right off the bat, there are some big events that a standard policy just won't touch. Natural disasters like floods and earthquakes? Nope. Those almost always need their own separate policies. And it kind of goes without saying, but if you damage something on purpose, or if your stuff just gets old and worn out, yeah, insurance won't cover that either. Now, here is a piece of fine print that catches so many people off guard. It's something called sub-limits. You might see on your policy that you have, say, $30,000 in personal property coverage, but, and this is a huge but, that does not mean they'll pay $30 grand for just any old thing. Just look at this number. A typical policy might put a cap on stolen jewelry at just $1,500.
That's it. For all your jewelry, combined. It doesn't matter if your collection was worth $10,000. If you have high-value items, you absolutely need one of those special add-ons we talked about, an endorsement. Otherwise, you could be in for a nasty surprise.
And that leads us to the biggest fear of all, right? You pay your premium every month, you do your part, but when you finally need help, the insurance company just says no. Why does that happen? Well, it's almost never for a random reason. It usually comes down to the specifics of the contract.
A claim gets denied if the cause is one of those exclusions, like a flood. Or, and this happens a lot, if the damage costs less than your deductible. You know, if a $400 TV gets fried and you have a $500 deductible, you're on your own. Other big reasons are not being able to prove you own this stuff, forgetting to pay your premium, and of course, trying to commit fraud.
So, after going through the coverage, the claims process, the good, the bad, and the ugly fine print, we land on the big question. With all this laid out on the table, how do you decide if a company like Allstate is actually the right call for you?
And really, the answer comes down to what you prioritize. You got to ask yourself, what kind of customer are you? If you're someone who wants a local agent, a person you can actually sit down and talk with, and you like the security of a huge established brand, then Allstate could be a perfect fit. But if your number one goal is finding the absolute rock-bottom cheapest price, and you're totally comfortable doing everything yourself through an app, you might find another option that works better for you. At the end of the day, renter's insurance isn't just a piece of paper, it's a financial backup plan for your life. We've just walked through all the details of Allstate's plan, so the final question, the only one that really matters, is this: what's yours? Thanks for digging into this with us.